Hey everyone, welcome back to Corporate Decoder, the place where we sift through the corporate jargon to find the real story. And sometimes, just sometimes, the numbers might not add up quite as neatly as they would like you to believe. Today we are diving into a filing from Lord Abbett Private Credit Fund, ACE, a company that seems to be busy raising money and making some interesting investment decisions. Let's find out what is really going on behind the scenes. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these filings in more detail. So, Lord Abbett Private Credit Fund S, or the fund as they call themselves, has put out a report detailing some recent activity. It looks like they had their biggest event on the 18th of December 2025, when they issued and sold a bunch of their common shares. They sold about 239,425 shares, bringing in a nice chunk of change, around $6.0 million. Each share went for $25.06. This is not a public offering, mind you. They use something called subscription agreements, which is typical when a company is selling shares directly to investors, often to people considered accredited investors, essentially. They are saying these sales are exempt from the usual registration rules because they are dealing with sophisticated investors who they assume can handle the risks. Now, let's get to the juicy part, their portfolio. As of the 30th of November 2025, the fund had made loans to 31 companies. They also held a stake in one other company and had an investment in a joint venture. The total loan commitment was about $330 million, and the par value, which is the face value of the debt, was around $254 million. What is interesting is that 93% of their investments are in senior secured debt. What does that mean for us? Well, senior secured means they are one of the first in line to get paid back if a company runs into trouble, and secured means they hold collateral, like assets to back up the loan. That sounds like a safer bet, right? And get this, 100% of their debt investments are at floating rates. This means their interest income goes up when interest rates go up, which can be good in certain economic climates. Let's look at some key metrics for their portfolio companies. The median 12-month earnings before interest, taxes, depreciation, and amortization, or EBITDA, a common way to measure a company's operating performance, was $70 million. Their weighted average net leverage was 4.4 times. This means, on average, their borrowers had about 4.4 times more debt than their earnings. This is a pretty common number in private credit, but it is good to keep an eye on. The weighted average loan-to-value ratio was 40%. This tells us that the loans they make are generally well below the estimated value of the assets backing them, which again points to a level of security. And their weighted average interest coverage was 2.5 times. This means their borrowers, on average, generate 2.5 times more earnings than they need to pay their interest expenses. This suggests that as of this report, their borrowers have a decent cushion to cover their interest payments. Finally, the weighted average yield on their debt investments, meaning the return they expect to earn, was 9.4%. That is a solid return, especially considering the secured nature of many of these investments. The report also shows their loan investment activity for November 2025. During that month, they put out new commitments totaling $12.8 million across 4 companies, with actual disbursed amounts, or par value, coming in at $10.0 million. Companies like Excursions Buyer, LLC, and Arcus Bidco Limited were among those receiving funds. Beyond their investment activities, the fund also declared a distribution. They're planning to pay out about $0.19 per S-share to shareholders. This distribution is set to be paid around the 28th of January 2026 to shareholders who hold the stock as of the 31st of December 2025. And finally, let's talk about their overall value. As of the 30th of November 2025, the company's aggregate net asset value, or NAV, was approximately $121 million. The NAV per S-share was $25.06. That is the same price they seem to be selling new shares at, which isn't unusual if the NAV is stable. However, they do mention that the final results could change slightly after their financial closing procedures are completed. Now, looking at these results more broadly, Lord Abbett Private Credit Fund appears to be operating as a solid private credit fund. Their focus on senior secured debt and healthy coverage ratios suggests a strategy centered on capital preservation while seeking decent returns. The 9.4% yield is attractive, and the fact that most of their debt is floating rate could be a win if interest rates continue to climb. However, a few things to keep in mind. While the leverage and coverage ratios look good on average, private credit portfolios are often concentrated, meaning a problem with just 1 or 2 large borrowers could have a significant impact. Also, the report is a snapshot in time. The market can change quickly and the value of those secured assets can fluctuate. A notable risk is always the reliance on accredited investors for their capital raises. While this allows for streamlined fundraising, it means their investor base might be less diversified than a publicly traded fund. The company is also an emerging growth company, which means they have less stringent reporting requirements for a period. So it is important to remember that not all information might be as readily available as it would be for a more established, mature company. Overall, Lord Abbett Private Credit Fund S seems to be executing its strategy effectively based on this filing. They are raising capital, deploying it into what appears to be relatively safe income, generating assets and returning some of that income to shareholders. The key will be their ability to maintain discipline in their lending practices and navigate any potential economic downturns. Alright, that is our breakdown of Lord Abbett Private Credit Fund's latest filing. What is your take on these numbers and what they signal for the company's future? Do these yields look attractive enough to you? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.